In a world that is just jam-packed with financial noise and all these complex get-rich-quick schemes, what if the real path to wealth was kind of just hiding in plain sight this whole time? Well, today we're diving into the brilliantly simple investing philosophy of one John C. Bogle, a guy who totally changed the game for millions of investors. Let's dig in and see how he did it. So let's just start with a big question. What if all those complex strategies, the endless hours picking stocks, and that constant need to watch the market, what if they aren't just unnecessary? What if they're actually designed to work against you? And what if the real way to build wealth was actually, well, simple? To really get Bogle's solution, we first have to understand the problem he saw. You see, his biggest insight was that for most people, the traditional investing game isn't just hard, it's basically set up for you to lose. Let's break down exactly why that is. Okay, so Bogle's whole idea starts with this really beautiful concept, the market return. Now, try not to think of this as some abstract number on a screen. Think of it as the real, actual wealth being generated by the entire economy. All the companies out there making things, innovating, and growing. It's the reward you get just for being part of the whole engine of capitalism. And here's the key part. This return, it's available to everyone. You don't need a secret password or some hot insider tip. It's just out there for the taking. So if this incredibly powerful return exists for all of us, why on earth do so few investors actually get to keep their fair share of it? Well, this chart right here, it reveals the villain of our story, costs. The whole circle represents that total market return we were just talking about. But before that money ever gets to your account, these little slices get taken out. A piece for management fees, another for trading costs, a slice for taxes, and it goes on. Until what's left for you, your net return, is a whole lot smaller than you think. Bogle had a pretty powerful name for this. He called it the tyranny of compounding costs. See, just like your returns can compound for you over time, these costs compound against you. They're like this relentless drag, year after year, just silently eating away at your future wealth. Okay, so if trying to beat the market is a loser's game because of all these costs, what's the alternative? Well, this brings us to Bogle's incredibly elegant and frankly revolutionary solution, the winning formula. This is probably Bogle's most famous analogy, and it just perfectly captures his big idea. Why would you waste all your time, your money, and your energy searching for that one single winning stock, the needle, when you can just own the entire market? Buy the whole haystack. So here's how that plays out in the real world. On one side, you've got these active funds, or managers charge you really high fees to try and pick winners. They're complex, they're expensive, and as Bogle proved, they almost always fail to beat the market over the long run. But on the other side, you have the index fund. It doesn't try to be clever. It's simple, it's cheap, and it guarantees you get your fair share of whatever the market returns. Let's put some real numbers on this to see what we're talking about. A typical active fund might charge you an annual fee of around 0.85%. It sounds tiny, doesn't it? I mean, it's less than 1%. But as you're about to see, that little number has some massive consequences. Now compare that to a simple total market index fund. Its fee can be as low as 0.03%. I mean, that is a staggering difference. It means you are keeping almost all of your money working for you, instead of paying it to a manager who, let's be honest, probably isn't going to beat the market anyway. And this bar chart shows the long-term result of that choice. That seemingly tiny fee difference, when you compound it over a 40-year investing lifetime, creates this massive gap in your final wealth. The high-cost active fund is just a constant anchor holding you back, while the low-cost index fund lets your money really grow to its full potential. And the crucial takeaway here is that Bogle's argument isn't just some opinion. It's not a hot stock tip. It's what he called the relentless rules of humble arithmetic. Because of costs, the entire group of active investors must, as a whole, underperform the market. It's just a mathematical certainty. So we've laid out the problem and we've found the winning formula. Now let's get practical. Let's see how you can actually use this stuff to build your own financial fortress. And here's what that simple plan looks like. It's almost shockingly simple. First, you own the entire US stock market with just one low-cost index fund. Then you add the rest of the world's stocks with another one. And finally, for some stability, you can add a total bond market fund, which is basically a collection of loans. And that helps smooth out the ride when markets get bumpy. That's it. 3 funds, and you own the whole world. This is such a liberating idea, right? It means you can stop trying to outsmart everyone else. Your goal is no longer to be some stock-picking genius who can predict the future. Your job is just to be a disciplined, long-term owner of the world's greatest businesses. Simple as that. Now we get to the final and maybe the most important piece of the puzzle. Once you've beaten back the costs and you've built your simple portfolio, there's one last enemy to defeat. And honestly, it's the most dangerous one of all. And that enemy is you. The biggest risk to your long-term success isn't a market crash or a bad economy. It's the person staring back at you in the mirror. It's our own human emotions. It's the fear that makes us sell in a panic, and it's the greed that makes us chase after bubbles. And Bogle's solution to this emotional battle is his ultimate command: stay the course. These 3 simple words contain an entire lifetime of investing wisdom. When markets are crashing and every single instinct in your body is screaming sell, this is the mantra. Your success isn't built on brilliant timing, it's built on unshakable discipline. So let's bring it all together. The keys to success are right here on the screen. Use a simple portfolio of low-cost index funds. Tune out all that daily market noise. It's just a distraction. Let the incredible power of compound interest do the heavy lifting for you. And above all else, have the discipline to stay the course, no matter what happens. And really, that's what it all comes down to. John Bogle gave us the map. He proved that this game is winnable, not by being smarter, but just by refusing to play the loser's game. The plan is simple, the math is proven. So the only question left is your discipline strong enough to actually follow it? Thanks for joining this explainer.